Welcome back to the Malaysia Money Matters show. It's the 21st of May, 2025.
You could be back.
Today, we're diving straight into some key financial and economic news, stuff that's affecting Malaysian companies, but also the wider world.
Absolutely. There's quite a bit happening.
Let's start local then. What's been catching your eye on the Malaysian front?
All right, well, first off, Axis REIT. They're proposing a pretty significant Sukuk program,
Sukuk, okay. Islamic bond, essentially. How significant?
up to RM3 billion. It involves senior notes and perpetual notes, too.
3 billion, that's substantial. What are they planning to use it for?
Well, the usual suspects, really. Capital expenditure, maybe some development work, working capital, general corporate stuff, and potentially refinancing.
Right? Covering all bases, how's it rated?
RAM Ratings gave it AA2 stable for the senior Sukuk and A1 stable for the perpetual. So pretty solid ratings.
And the market reaction?
Positive. Units closed higher at RM 1.90. Seems like investors see it as a sign of potential growth, you know?
Makes sense. Okay, next up, Eversendai. They've landed some big contracts.
Huge ones. RM 1.3 billion in total across the UAE, India, Singapore,
Impressive spread.
and interestingly, a renewable energy infrastructure subcontract in Germany for offshore wind converters.
Germany, wow, that's quite a win, especially in renewables.
Exactly. It's for TenneT's 2-gigawatt program. They'll actually fabricate the parts in Ras Al Khaimah, shipping them through to December 2027.
That's a long-term project. Any other notable ones?
Yes, Steelworks for Chennai Airport Phase 2 and the new Science Center in Singapore pushes their total order book to RM 6.6 billion.
6.6 billion. No wonder their shares popped up to 56 sen.
Definitely reflects that pipeline.
Okay, Gas Malaysia. They're moving into biomethane.
Yeah, launched a centralized injection station down in Kluang, Johor.
Biomethane. So cleaner energy from waste.
That's the idea. It's their subsidiary, Gas Malaysia Green Venture. They're tapping into bio-waste, mostly from palm oil millers, turning it into energy.
And they can sell this.
Yes, at a premium, actually, to industrial customers who need to meet their ESG targets.
Ah, the green premium. How long until it pays for itself?
They estimate about 7 to 9 years to break even. Could be faster, they say, if they secure more bio-waste supply. They're looking at millers within a 200-kilometer radius.
Sounds strategic. And they're planning more.
Seems so. Working on a fourth plant up in Ampang, Jajjar.
Okay. Now, a bit of legal drama with IHH Healthcare.
Their Singapore unit, Northern TK Venture, has upped its damage claim against Daiichi Sankyo.
Right, this is about the Fortis healthcare deal in India, isn't it?
Exactly. They're now claiming over RM 5.7 billion. They argue Daiichi Sankyo blocked their open offer for Fortis shares because of Daiichi's own dispute with the Singh brothers.
So NTK feels they lost out significantly.
Yeah, they claim financial harm, a frozen deposit, lost profits. It's quite messy. The next court hearing is in July.
One to watch. Okay, semiconductors in RM. Profits down.
Yeah, down about 24.7% year-on-year for their third quarter. Revenue slipped too.
Why the drop?
They're saying lower volume loading across all segments, plus a startup loss from a unit in China.
But they still issued a dividend.
They did, 1.3 cent,
Yeah.
and they're cautiously optimistic, hoping tariff tensions ease, focusing on that China business and partnerships. Shares ended slightly up at RM 2.02.
So managing expectations, perhaps. How about Duopharma Biotech?
Good news for them. Their subsidiary Duopharma Marketing, along with Biocon's local unit, got another contract extension from the Ministry of Health.
For insulin supply.
That's right, another 6 months, effective until October 28th. It's the third extension since the original contract in December 2021.
Seems like a reliable partnership. Did they say the value?
No, the value for this specific extension wasn't disclosed, but their shares gained a bit, up to RM 1.33. Stability is valued.
Definitely. Now, MyE Services, profits up. And something about blockchain.
Yes, net profit rose 16.5% year-on-year for the first quarter. Revenue jumped quite a bit, too.
What's driving it?
They're crediting contributions from their Zetrix blockchain platform, things like Web3 service fees and sales of Zetrix tokens.
Zetrix. So their blockchain venture is actually paying off.
It seems to be gaining traction, though it wasn't all positive. They did have an impairment loss from their investment in high-tech Padu, which offset some gains.
Okay. And they expect more growth from Zetrix.
Yes, especially with the planned operationalization of the Malaysia blockchain infrastructure. Shares held steady at 89.5 cent.
Interesting. Let's switch gears to Petronas Chemicals. A net loss, that's unusual.
It is. A loss of RM 18 million for Q1, a big drop from profit last year.
What went wrong?
A few things. Lower sales margins, supply issues at Pengerang, foreign exchange losses, and rising costs.
So a combination of factors. Was revenue down too?
Actually, revenue was slightly higher. Increased sales volume helped, but a stronger ringgit offset some of that. Plant utilization improved overall, but the olefins and derivatives segment really struggled.
Any bright spots?
Their fertilizers and methanol segment did better. But still, the overall picture led to the share price falling to RM3.72.
Okay. Sapura Industrial moving into batteries.
Yes, they've formalized their joint venture with Zhejiang Zhongzi Precision Technology from China
What's the plan?
to set up a battery component manufacturing facility right here in Malaysia. The JV company is being incorporated soon.
Who holds what stake?
Sapura Industrial will have 51%, Zhejiang Zhongzi 49%. It's a clear diversification move for Sapura into energy storage. Shares were unchanged at 88.5 cents.
A potentially hot sector. Speaking of hot, Sports Toto, record profits.
Well, a 12-year high for their third quarter net profit, more than doubled year on year. Revenue also hit an all-time high.
What drove that? A lucky streak?
Pretty much. They said it was a surge in punters chasing the supreme 650 jackpot. Big jackpots draw big crowds, you know.
Right. People hoping to strike rich dividend.
Yep. 2-cent interim dividend declared. They seem optimistic despite, well, economic headwinds and illegal operators. Shares nudged up to RM 1.35.
Okay. Sunway Construction seems busy with data centers.
Very busy. Secured another contract, RM 260 million, for the final phase of a data center project in Johor.
That's on top of earlier phases.
Exactly. Brings the total project value to nearly RM 393 million. It should contribute to earnings from 2025 onwards.
And their overall performance.
Excellent. First quarter net profit more than doubled, again, driven by strong construction work, especially these data center projects. They declared a 5-cent dividend, too.
So data centers are a key growth engine for them.
Absolutely. They mentioned their tender pipeline for more data centers is looking healthy. Shares jumped to RM 4.88.
Good for them. TSH Resources profits up strongly.
Yes, first quarter net profit jumped 140% year on year.
Driven by
Higher palm product prices, CPO, and palm kernel. Also better segmental contribution and lower finance costs. Revenue was up too.
So benefiting from commodity prices and cost management?
Pretty much. Lower fertilizer costs helped, though that was partly offset by higher Indonesian export levies. They did note CPO prices have dipped recently, though.
Something to watch.
Dividend.
No dividend declared this time. Shares closed a bit higher at RM 1.11.
Okay. Valesto Energy expanding into Vietnam.
Yes. Secured a contract there for over 40 wells. They'll deploy their Nagne 4 jackup rig starting in the first half of 2026.
Good for diversification and rig use.
Exactly. Expected to contribute positively in 2026 and 2027. The contract sum wasn't disclosed, though.
And finally, Petronas looking at Indonesian assets with ENI.
Yeah, they want to include some oil and gas projects in Indonesia's Kutai Basin in their planned JV with ENI.
Why the Kutai Basin?
Significant gas reserves there. The idea seems to be swapping interests, maybe Malaysian and Indonesian assets, for ENI's blocks in Kutai. But it's still early days in the talks.
All right, quite a wrap up on the local front. Let's shift focus internationally. What's happening that could ripple back here?
Well, first up, Australia. The Reserve Bank of Australia cut its key interest rate again to 3.85%.
A second cut this year, even with recent data showing higher inflation and hiring. Exactly. It suggests they're quite concerned about global and domestic uncertainties, maybe prioritizing that over the immediate inflation data.
Interesting. How did markets act?
The Aussie dollar fell. Bond yields dropped. Markets seem to be pricing in maybe even more cuts down the line.
Okay. And China also cutting rates?
Yes. They cut their benchmark lending rates, the 1-year and 5-year loan prime rates. First time since October.
Why now?
Seems like an effort to stimulate consumption and loan growth, especially with the trade war pressures. Major state banks also lowered deposit rates to help their own margins.
A coordinated stimulus push then?
Looks like it. Banking shares actually edged higher there.
Meanwhile, in Japan, bond markets took a hit.
Yeah, plunged after a weak government debt auction. It highlights worries about the Bank of Japan maybe stepping back from the market, plus concerns about rising government spending.
So fiscal concerns boiling over.
Seems that way. The 20-year yield hit its highest since 2000. Even the Prime Minister expressed concern. Plus, uncertainty over U.S. trade talks probably isn't helping.
Okay. Kazakhstan increasing oil output. I thought OPEC Plus wanted cuts.
They do. But Kazakhstan's production rose by 2% in May. It's defying that pressure, despite committing to cuts earlier to compensate for overproduction.
Tricky situation. Could impact oil prices.
Potentially, yeah.
Yeah.
Especially with Western oil majors heavily involved there. It adds complexity to OPEC plus management.
And the European Central Bank is sounding alarms about tariffs.
Yes, warning that escalating global tariff tensions are a significant concern for financial stability and the economy.
Just underscoring the global risk.
Right. They're urging monitoring and proactive steps by financial institutions.
And the Bank for International Settlements, the BIS, flagged something about the U.S. dollar.
They did. Potential for a dollar scramble. They're worried about the huge FX swap market that's about U.S. $113 trillion.
A scramble. What does that mean?
If investors suddenly unwind positions amid U.S. volatility, maybe linked to trade policy or credit ratings, the dollar could spike rapidly, causing major liquidity issues globally.
Okay, so another potential financial stability risk tied to U.S. policy.
Exactly. Their comments came after recent market jitters and the Moody's downgrade of the U.S. credit rating.
And speaking of tariffs, that Alliance trade survey showed exporters are really feeling the pinch from new U.S. tariffs.
Yeah, quite stark numbers. 42% expecting export revenue declines. They estimate global export losses could hit U.S. $305 billion in 2025.
Ouch. A real tangible impact.
Definitely. German exporters in particular were very concerned about geopolitics and protectionism.
Right, let's quickly touch on political news. Malaysia and Huawei, a bit of confusion there.
A little bit, yes. Malaysia announced a plan for an AI system using Huawei chips, but then retracted the statement pretty quickly. No explanation given.
Why the backtrack, do you think?
It just highlights Malaysia's delicate position in the whole U.S.-China tech race. There was U.S. guidance about Huawei's Ascend chips and concerns about semiconductors potentially being transshipped via Malaysia to China. So, politically sensitive.
Walking a tightrope. Okay, Australia's election center-left won, but now credit rating warning.
Yes, S&P Global Ratings basically said Australia's AAA rating could be at risk if the new government's election promises lead to bigger deficits and more debt.
So fiscal discipline is key.
Always. The RBA will also be watching for inflation risks from any increased spending.
And U.S.-China trade. Still uncertain despite the pause.
Absolutely. That 90-day pause agreed in Geneva is just that, a pause. The underlying tensions and tariff uncertainties are still very much impacting markets and the economic outlook.
And finally, that Moody's downgrade of the U.S. credit rating.
Right, citing concerns about the rising government debt. It definitely fueled discussions about U.S. economic stability and investor sentiment.
Okay, we've covered a lot of ground. Local companies, international trends, political factors. So bringing it all together, what do you think is the most, let's say, exciting or significant news of the day for our listeners here?
Well, given how interconnected everything is and Malaysia's reliance on trade, I think the simultaneous rate cuts in Australia and China are really quite telling.
Because they're both reacting to global uncertainty.
Exactly. They're proactively trying to buffer their economies,
Yeah.
specifically mentioning global uncertainties and implicitly the ongoing trade issues, largely driven by U.S. policies. It shows central banks in our region trying to navigate this really tricky landscape.
So for listeners, it signals.
It signals the potential for more monetary policy moves globally. And it just reinforces how sensitive economies, including ours, are to these big trade dynamics. It's a reminder that international politics directly impacts economic policy here.
And maybe a silver lining in the resilience of Malaysian banks.
That's another important point, yes. Amidst all this uncertainty, analysts pointing to Malaysian banks as, a defensive play with decent dividend yields. That offers some reassurance for investors looking for stability.
A complex picture, but definitely some key takeaways there.
For sure.
All right, that wraps up our deep dive for today's Malaysia Money Matters. We really hope this gave you a clearer picture of the key financial and economic currents.
Hope it was useful.
For more analysis like this and to stay ahead of the curve, do make sure you subscribe to the Malaysia Money Matters podcast.
We'll be back with more insights.
Join us next time for another revealing exploration.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.